Good morning, everyone. My name is Josip Causic. Welcome to Trading and Review. If you can take a moment and download the Speak Up app and then type in the chat room key 70558, in that case, you would be able to have a direct access to me during this 1 hour. And we can then proceed. So the top agenda for today is following. We're going to first look at the bigger picture because it's end of the month and it's very helpful to do that every month. And I'm just getting text here. I'm going to just confirm it. It's all good. And we're going to look at after the monthly the sectors. And then we're going to look at the individual names and we're going to find one trade to place before the end of the hour. So if you're watching this on a recording and you don't care about the big picture monthly and the sectors, you can just then forward towards the end of the session where I'm actually placing the trade. And for placing the trade, we're going to use Thinkorswim platform. So moving on to our platform here at tradewithufos.com, I have four markets here that I'm presenting. And first one is Dow Jones Industrial Average. So now the Dow Jones Industrial Average is a good measurement of what the market is doing because it's been around since 1896. So it was originally composed of the 12 industrial companies, but right now it has a 30. And it's a price-weighted index, which means that the contents are not weighted based on the share prices rather than on their market capitalization. So I'm good. I'm getting the text here, so we're good. So what I have done over here, I have marked on the chart this low of the March of the 2020 when we had the COVID. And I have connected it here with the high of the October of the last year when everybody was expecting market is going to go lower. And we violently bounced to the upside. We had the very strong October. We had the very strong also November. And then in December, we kind of went sideways. So what I want to point out to you here that in February of 2020, first of all, the war started in Ukraine, and that low of the February 2020 has been acting multiple times as a support in the March of last year, in a February, in a May, and then it broke in the June. And then when the price was coming up, it acted again as a support because it was no longer resistance. And currently we are above it, but whatever the price action the Dow Jones that those 30 companies have done is now pretty much being erased because most likely by the end of the day today, we are going to close below it. Now, again, we don't have yet 100% certainty, but if you just look at the daily, what the market is doing here, in a moment, I'm going to bring in the FinViz, which is a daily indication of what the market is doing. The Dow Jones is very weak today. It's down about 112 points, which is unlike, for instance, the NASDAQ or the S&P that are both up. Now, we don't know which way it's going to go, but I want to continue with my monthly presentation of what each of these major sectors are doing. So the Dow, as I said, it's important because it's been around since 1896. It's a good measurement of what the market is doing. So we are moving on to the SPY. Now, the SPY is S&P 500, and it has came into existence in 1957, and it's a frequently rebalance, which means that out of the 500 company, they might remove one of the companies, but they're not going to change the name into the S&P 499. They're going to actually put the other company in. So let's say HR Block, that's a tax preparation company, was removed in March of the 2021, and it was replaced with Moderna which is a biotech company. And when we turn to the chart over here of the S&P 500, we're gonna find a very much similarity to it, because I have marked again the March of 2020 low, connecting it with October low, and that I'm using as a red line right here, pointing out to you that low hasn't been challenged in October, November, December, January, and now we are here in February. And what is interesting, that when I'm comparing the February of the 2021 with February of this year, that low when war started in Ukraine, that was acting as a support on the way up, acting as a resistance. So we have two markets, the Dow Jones Industrial Average and S&P, that are struggling with the same level. That doesn't mean all other markets are doing the same. We're going to move to the NASDAQ, which stands for the National Association of Security Dealers Automated Quotation System. It's tracked by the ETF called QQQ. Now, this NASDAQ has been in existence of 1971. So if you can just picture this, we have four markets here. And what I'm going to do here, I'm just going to bring in the big picture and kind of lay it down to you so you would understand what is happening. So the diamonds had been around since 1896. The SPY has been around as a tracking of the market since 1957. Over here we have a NAS, which is basically QQQ. By 1971 it came in existence. So again, it's the newest of the three products, and it's a second largest stock exchange in the world by the market capitalization, which means it's right after the New York stock market. So it's specialized in technology, and it's a very first electronic stock market. Similarly, on previous example, we have looked at the low of the March of the 2020, and then we notice how October, which in the media they always say October is the worst month. That's not necessarily true, because we have seen in October of the last year that market has rebounded. It has rallied up. But notice that low of the February when the war started in Ukraine. We have rallied virtually to the penny on the way up this month, and we weren't able to take it out. So we have that as a continuous resistance on the three major markets, the Dow, the NASDAQ, and the SPY. So obviously, when we are comparing these three markets, it's very important to point out that these three markets do look a little bit different. So for instance, if I'm encapsulating here the price action of this January versus February, we can see on the Dow Jones Industrial Average, we're just about ready to go where? Lower. On QQQ, that's not the case, because price action of the January versus the price of the February still on the upper end of it, and it's not challenging the low. So there is a high chance that if the market goes higher, the NASDAQ is going to be the very first one who's going to bring us to the upside. While on a SPY, right here, we have a high of the SPY, and if I use the same kind of logic and just measure it, where is the price action in terms of the January high and low? We're somewhere dead in the middle. So it's important at least once a month, at the end of the month, to take assessment what these major markets are doing. Now notice here, I'm going to just change the color in the blue to discuss the IWM, because IWM often gets forgotten because that's the small caps. So that market capitalization is somewhere between 300 million to 2 billion. And if I again bring in the picture of the four major markets that we're discussing, so the Russell or the RUD has been a tracker since 1984, right? That's a George Orwell year, and I just want to point out to you the difference between Dow, which is almost considered like a grandpa because it's been around for a long period of time, S&P being pretty much the most liquidly traded ETF, SPY, SPX, cash settle, and ES futures versus the Nasdaq and Russell. Russell is the one that we're going to look at right now because it's rebalanced annually versus, let's say, S&P 500. They are rebalancing it frequently, but not necessarily annually, which means at the close of the trading of the third Friday, which is in March, June, September, and December, the S&P would rebalance, while the Russell wouldn't till the end of the year. So having said that, I want to just point out to you the same situation as on the previous examples. All of these three markets have been universally down until the March of the 2020. All of these three markets have found their respective lows in October of the last year, and since then they've been going up. Russell has reached its high in January and has attempted to go even higher in February, but then when you really compare it to that February low of the last year, we are currently slightly above it. So I just want to make sure that you kind of follow the logic of what I'm trying to present to you. So the yellow line that I have drawn on every one of them is what really matters. And when I bring up here the agenda, which I'm using to give you the big picture, I want to make sure that everything is side by side. So the Dow Jones currently is looking at that February of the 2020 when the war started in Ukraine as a price action, which is above. So is the Russell. Russell is actually sitting right at it, and if it breaks below it, then we can go lower. But notice that both QQQ as well as the SPY are below it. So why is that important information good? Because next I'm going to move to the sectors, and I'm going to do the similar analysis of these sectors that are major sectors that every market is composed of. So for instance, when I bring back FinViz, FinViz has this huge box right here that represents what the market is doing. And you would notice out of the multiple sectors that exist, this box is the biggest because it is a XLK. XLK is the ETF that tracks tech. So what I'm going to do next, I'm going to put inside the charts that we have here the XLK, and we're going to analyze how the XLK is doing in terms of the same measurements. So you would notice in terms of the bigger picture, it's not that different from what we have pointed out to you. Low of the March of the 2020 is consistently being repeated because it's the same for all of these four major markets as well as for technology. Then October, when television was telling us we're going to go lower because October of 1987 or October of 1929 was the time when the market crashed. We have gone lower. So those of you who are joining me, make sure that you type in the room number for this particular session that we are attending is 70558. So make sure that we have that here. I made sure that 7088 is shown. And we are now moving on to look at the next market. And this next market that we're going to look at is a technology, not the technology, but the healthcare. Now, the healthcare is also very significant, but you would notice that this particular month versus previous month, January, is quite different because we have gone lower. So if you're planning to place the trade on, let's say, Moderna, that I already brought it up in conversation, or Pfizer or something like that, we have definitely already gone lower than that. So we're not going to then place the trade on a technology, nor on financials. We're going to now look at XLC, and XLC is the communication sector. How big is the communication sector in terms of the weighting on Finviz page? So you would see over here that the communication sector is just this little box versus, let's say, and I'm going to use the red for the healthcare, that is this big. So be aware of it, that the healthcare in comparison to the technology is smaller, but when communication sector is compared, communication sector is less important than healthcare. But we're still gonna evaluate how is the communication sector doing in terms of the big picture. So in terms of the big picture, you would notice that we did hit the low at the same time on all of these products that I'm discussing back in March. But notice what is happening here with October of the last year. So we did have a trend that was intact because in October we came to the low and we bounced. But look at that bounce in comparison to these other products that we look at. It was pretty pathetic. It looked more like a doji sideways action. November was a strong action on the communication, but then in December we virtually gave everything back. January was very strong, but right now we're again coming back within the range of the communication. Now, the one sector that I believe personally that it's the most important sector for 2023 is financials. So what is going to happen with the financial is going to determine what is going to be with the rest of the market. So notice similar situation that we had on previous markets. I'm going to just change this into yellow and again explain to you. Low of the March, low of the October, that makes it into a nice uptrend. Strong move up in November. No activity that is significantly worthwhile, anything in December. And then look at the January and look at the price action that is taking place in February. So we're really now in a situation that our sectors are, and I'm going to again put it inside of this document, the conclusion of this review of the sectors that is side by side with the other one on the top, which was looking at the diamonds, the Q, the SPY, and Russell. XLK, same green line that points out the commencement of the war in Ukraine against Russia. Price action is below it. On a communication, price line is below it, and on a financial, price line is below it. Now notice here we're looking at the health sector, and health sector is the only one that has a price action above it, which is very similar to what we had on the Dow Jones. The Dow Jones is the one that is above that line. What I'm going to do with that information is very significant, and I'm glad you asked that question. What about the four major things at NASDAQ? So again, the room number that I'm showing you here, it's 4044. I want to make sure that you guys see that. And I'm going to now look at Apple. Apple is the first component that I'm going to discuss here. And I'm going to use the same logic, but I'm going to go much quicker in terms of what we're going to do here because I want to place a trade on one of these four major things. So what I'm doing here on a monthly is looking again at the February of the last year and where are we in relationship to that yellow line. So here's the February of the last year. Are we above it or below it? Conclusion is we're below it. We're not going to pick that as a trade. Next one that we're going to look at is Microsoft. So I'm going to pull up the Microsoft here, use the very same logic, typing in the ticker here, Microsoft. Again, here's the low of the 2020. Here is the February of the last year. And by now, I'm about 15 minutes into the session. You will notice how that February low, it's acting as a major level of resistance. Every time when we come to it, we kiss it, we fall back down. So I'm not going to take any trade on the Microsoft. After the Apple and the Microsoft, I'm going to look at the Amazon, and I'm going to point out on the Amazon where this thing is. So I'm looking for a strongest of these strongest stocks in a relationship where this thing is. And you will notice over here, just by losing this one line, that in the February we had that line and we're way below. And in fact, Amazon is now reaching pretty much the low of the 2020, which is quite surprising. So Amazon definitely not a bullish candidate. We are left with one more product here that I'm going to look at, and that's NVIDIA. And the NVIDIA is unlike the others because when I pull it up, your eyes are going to right away notice that from the low in March to the October of the last year, we've been in a consistent uptrend. So we had a situation that we have moved up in January, and from the January we have moved up even higher, and NVIDIA is having a very, very good month in relationship to what the price action did in the February of the last year. So in a conclusion here, before we proceed, I want to make sure that we are aware of it, that out of all these products that I'm discussing with you this morning, big picture, the sector, and individual names, NVIDIA is a product that is only one that is still up. So what we're going to do now, we're going to look at the chart of the NVIDIA and we're going to consider placing the trade on it, and we're going to use the sticky notes to kind of go through it. So one more time, this is what the currently market is doing. It's kind of going sideways, but the NVIDIA has had a huge gap from the earnings. So over here, they had the earnings in February. And ever since that earnings in February, after the market closed, they have ripped to the upside and they left this huge vacuum unfilled. So what we're going to do next is we are going to simply consider placing a trade on the NVIDIA. And in order to do that, I'm going to bring my watch list here where I want to focus on NVIDIA. So on NVIDIA, I have inserted here the proprietary tool that uses red unfilled orders and green unfilled orders to find the level of the resistance. Then what I had done next, I have inserted the strike prices above it and below it to show where is the biggest activity in terms of the price action. So let's now look at this piece by piece. We have a huge activity here at the 245. 245 acts as a level of the resistance. So what I'm doing right now, I'm gonna showing you one more time the on the FinViz, the NVIDIA being in an uptrend, but when you look to the left over here, you will notice that the 245 level is acting as a big level of the resistance. So what I'm going to do with that level of the 245, I'm going to execute a trade. And the reason why I want to execute this trade is very simple. I want to make sure that I am placing the trade here. Hi, Mark. Good to see you in the session. That I'm executing the bear call trade that I'm going to in a moment explain how it works. So I'm going here in NVIDIA for the March 10th, and I'm focusing here on a 245. And I want you to notice in the terms of the volume and open interest. In the terms of the volume and open interest, we have a huge activity. We have a huge activity of 1,374 contracts traded. And by the way, these are the out of the money options. How do you know that they're out of the money options? I'm going to just click this volume and I'm going to change it to intrinsic, and it's going to show right here that we are having a zero intrinsic value, and we are selling the 245 with intention of protecting ourselves higher with 247. So Mark, I'm glad you're here. We're going to execute this trade by simply single right clicking, selecting the vertical, and we're going to be getting the 68 cents for this particular contract. So we are asking for 70 cents while we're risking $1.80, and we are placing the trade in. So in a moment when this thing gets filled, we're going to here click. So right now it's waiting here to be filled. In terms of the cash, in this account we have about 11,000. After we have placed this trade, this $11,109 became $11,179 because we have received 71 cents of the credit. And that's the reason why the price action of the balance has gone up by the 71 cents. So now be aware of it that we are risking the distance of these two. It's $2.50. $2.50. So how do we arrive to that conclusion? We arrive to that conclusion simply by looking at activity here on this particular expiration, which is March 10th, and we saw that 245 had a quite significant activity over here. So now I'm going to look to the downside. Where can I find the resistance to the downside or the support to the downside? And one of the things that we can do is look at let me just type it in here what we are doing. So NVIDIA, we did the bear call spread in which we sold 245 and we protected ourselves with 247.50 call, and we got that for a credit of the 70 cents. And now when we look at 55 minutes NVIDIA, the price action is sitting around the 235. We see the 210 as a possible level of the support. So what I would like to do, I would like to actually place the bull put spread, which is going to be involving, so bull put spread on the downside is going to be involving, and I'm going to just type it up here, selling of the 210 and then protecting myself with the lower strike price, which is a 207.50. And we're going to see for how much money we can get that. So that particular trade that I'm going to be placing requires me to show more strike prices. I'm going to show again about the 24 strike prices. So I can see over here the huge volume on open interest. So we have an open interest here that's been showing us 3,365 contracts of the price action. And I want to place a bear call spread at that level. I mean, a bull put spread at that level. So the way how I do that, I single right click, I sell it, I send it as a vertical, and I know I'm getting only 20 cents, but that 20 cents plus the other 70 cents that I have gotten is going to be good risk to reward for my iron condor. I just got filled for a 20. I want to make sure that I throw that inside the document here. That the reason why we have selected the 210, because obviously 210 had a huge open interest, and those things were really poking my eyes, and I want to make sure that this is now inserted here into the activity. So what I'm doing right now, I'm bringing up the neutral strategy called short iron condor. I'm editing the spread for the March of this year, and I'm now starting with the put side. So what we did on the put side, we picked 207.50, and then we sold 210. So that 210 that we sold, I'm going to fill in a moment exactly the specifics, what was a filled price and all those. But I want to continue here and make sure that I have also explanation of what we did on the top part. So on the top part, we did 247.50 while we sold at 245, and that was the call side. And in a moment, I'm going to just pull up here the Thinkorswim, so I can get the information exactly of how much we get on every one of these. So on every one of these, we have gotten filled at 101 and 102. I'll just put that in here so it can be all inside this document. So there it is. So let's now just make sure that I have all these things filled up so there's no confusion about the price. So 210 we were able to get for $1.01, but then we had to turn around and give back 80 cents, 81 cents back. That right there gives us 70 cents. On this one, it wasn't almost like the same premium, because what we were able to get on 245 is a 370, and over here is a 299. So we click now OK. So we got exactly 91 cents. So I'm going to make sure this short iron condor is here and that we have that inserted inside of this document that I'm showing to you. So this document right here is really important because it shows all the pieces of this trade. So explaining how we came about to that is what really matters. So the way how we came to that is that we looked at the chart and we concluded that from all the charts that we look at, NVIDIA is the one that is strongest and it looks the best. We located the different areas on it and we concluded that that particular case is what we wanted to place the trade on. And when it comes to the risk and reward is going to show us that we have this dome shape that as long as we stayed in between these levels, we're fine, and we are risking $159 to earn possibly the amount of 91 cents. So here, let me just put this in a sticky card. So here's also a sticky note. I'm going to fill it up and share it with you. And on this sticky note, information is following. So we have a March 10th of the 2023. The range involves 247.50 call, 245 call, and a 210 put and 207 put. So as long as we stay within that range, we should be fine. Now let's look at one more time the market and conclude where the market is going right now. So if we stay here between these levels of the 245 and 210, then we're gonna be able to collect that premium in a short amount of time. So again, on the Thinkorswim platform, we have received a 90 cents, 91 cents to be exact, although we need to take out the commission, and our balance has gone up in amount of that $91 minus the commission. Let me just see here if you have any questions here. No, we don't have any questions. So let's now quickly look what the market is doing since we last time glanced at it, because we want to make sure that we place another trade on an S&P 500 using the same logic. So due to the fact that market is kind of more bearish than bullish, and I'm saying over here, if we were bullish, we would have a lot more green stuff, and obviously we only have one green that is standing out. That's a former Facebook. I'm considering actually placing a bear call spread on the S&P 500. So what is a bear call spread? Well, bear call spread is a short-term bias to the downside, and I'm going to put the S&P 500 for today's expiry, and I'm going to place the bear call spread, and then I'm going to decide whether it's worth for me to even add the bull put spread on the downside. So when I pull up here the SPX, and I get the trade grid for today's expiry, I want your eyes right away to go on the volume and open interest and to see the activity that we have here. So activity actually is huge here around the 40-10. So what I'm going to do right now, I'm going to place the bear call spread at 40-10, protecting myself with 40-15. So I'm selling here 40-10, 40-15, and that's only 40 cents. So it's really not that much left. Let's see if I'm going to get filled here on it. I got filled and I got the price improvement 45 cents. So let's now enter the same trade on our platform here. So we're going to type in here SPX, and when we type in here SPX, we're going to have a caret sign in front of it, and that's going to be a short iron condor that it's going to be considering today's expiry. So today's expiry is 28. We just did the call that involved the 410, and we protected ourselves with the 415. This 410 and 415 that we just got filled brought in 45 cents. We paid $1.25 on the top and 80 cents on the bottom. So $1.25 came to us, and 80 cents is what we had to give back. Going back to that same chart that we had before, I want to see where can I actually place the lower part, meaning the bull put spread. So I'm gonna look at the options. With options, it has a location of the SPY, the SPY is not we are trading the SPX, but obviously on a SPY, auto climate shows that we're in a downtrend. Whether or not we're going to trade options with the calls and puts, it's almost irrelevant, because all that we are getting here is equal amount of trades on the calls and the puts. So when I type in the caret sign, SPX, we can look at the different time frame to find out where would be appropriate for us to place the bull put spread. Well, as of now, we have a lot of unfilled orders sitting at the 39.50. So if I bring up 39.50 and we are now at the 39.80, that's about the 30 points lower. So we're gonna notice here we have a huge activity of 23,000 contracts just traded today at that level. 23 trade. So this would be DT0, day trade zero. These are the people who are expecting that most likely S&P is not going to drop another 30 points in a one day, when the market maker spells out their expectation right here with the $25. And obviously, if we are sitting here at the 39.80 and we want to sell the 39.50, that's at $30 lower. If I keep on talking, I won't be even able to get anything out of this particular credit. So I'm going to just take a picture here and I'm going to quickly sell this if I'm able to get anything. It's only 35 cents. So that's maybe not enough, but I need to revisit one more time chart to see how I feel about the chart, because maybe I can push this a little bit higher to the 55. If I push it higher to the 55, maybe my premium is going to be a little bit better. So let's sell the 55, bringing 50 cents credit. Let's see if they're going to fill me now. Bingo, I got filled for a 55. Okay, so if I got filled for 55, then I just want to memorize how much did I pay for it. So over here is a 170, over here is a 115. So this is the second item condor that we are taking place. This morning we did the first one on the NVIDIA, and my second one is here being done on SPX. And I'm gonna pull up here the information that I had on the SPY. So here's a chain, SPX. We are editing this. We are doing the iron condor. Iron condor involves today's expiration, and in today's expiration we have this information right here. I'm going to just copy it and make sure that it's inside correctly. From the top to the bottom, we have traded 39.55 put, and we protected ourselves with 39.50 put. So 39.50, 39.55, 39.55, and we did this for a premium of the 115 was given to us, and over here 170 was received. On the other end, we did the 410 and we protected ourselves with the 415, and the filled prices were $1.25 and $1.80. So when we click OK, we get the whole dollar. So that $1 is what that premium is for us. And let me make sure that I put this inside this Word document that we've been creating here. So this is a new trade on SPX. On SPX, we have received the $1, while over here we have received 91. What is the difference of the two? Well, let me now compare side by side. So when we have a NVIDIA, if we strictly just focus on a NVIDIA $91 credit, we're missing a big picture because SPX is giving us a whole dollar, but we need to also look at it. What is the amount that is being invested? Over here, invested amount is $2.50. So if you're investing $2.50 in making a 91 cents, that is way better rate of return than over here we're investing due to the fact that the spreads are $5 wide, $500 or $5. So when we divide these things side by side, I just want you to be aware of it, what the difference is. So obviously, when we have a 91 cents divided by the investment of the 250, we are getting the rate of return of the 36%. Now be aware of it that 36.4%, it takes days for us to get. And what I mean days for us to get is very simple, is that we have did that for a March, while SPY is not going to be expiring in that many days because it's going to be expiring today. So our NVIDIA trade needs to wait 10 days to get that 36%. While over here, 1 divided by 5, it gives us basically 20%. We're getting the 20% in a 1. We are getting the 20% in a day versus over here 36% in 10 days. So I'm going to start kind of wrapping up the things to explain to you one more time how we did the whole session. So we looked at the big pictures and we concluded the Dow Jones, which is the oldest of the product, being the only one that is above that line in the sand. Then we said, okay, let's move on and let's look at the sectors. On the sectors, we had a line on the sand, and just like the Dow was the only one that was above it, the healthcare was the only one that was above it. We decided not to place the trade either on a Dow nor on a healthcare. We dig deeper into it, and we actually looked at the 4 technology components that we were interested in. And we concluded NVIDIA really looked good. NVIDIA has already passed their earnings. It had this huge gap after the earnings. Even with the market being weak and going sideways, NVIDIA is holding up strong. We pulled up the FinViz and we concluded the 245 was a level that was area that is safe for us to place the bear call spread, and we placed the bear call spread for the credit of 71 cents. So we got filled in for 71 cents. Then we turned around and we looked at the bull put side. We noticed that 210 was the area where we can actually place a small bull put, even if the gaps start getting filled. Most likely these unfilled orders are going to kick in, and they're going to be defending that area. Bulls are going to be defending that area. So we were able to get that. We arrived on the conclusion why we would sell the 210 put, because the open interest was huge. Then we added up 70 cents plus the 20 cents, and we get a total of the 91 cents. We realized that we were not risking $250 because out of the $250, they already gave us $91. So we're really only risking $1.59. So I know some people like to look at that rate of return and say like, well, then really you should be dividing the 91 cents not with the 250, but with the $1.59. Well, in that case, you're going to get the higher rate of return. You're going to get the 57 cents. But the reason why I decided to show it to you that on the NVIDIA, this is what it is, because when I go over here and I show you the activity and how much money it's being used as a buying power effect, notice NVIDIA has a buying power effect of the 250. It almost doesn't matter that they gave me a $91 because from my account they have frozen the $250 for a duration of the 10 days, and they will not allow me to use that money for the time of those 10 days. They will not. And this is what I want to make sure that it's clear to all of you who are attending this or watching this session later on, that my outlay of the capital is 250, which is the reason why I have divided the 250 here with the 91 cents of the credit. Just like over here, I have divided the $500 with the 100, which is obviously easy math. It's only 20%. But for the SPY, they're using up the $500. $500. Now, what will need to happen not on a SPY but on SPX? On the SPX, what would need to happen is that SPX stays above 39.50. So the place that we don't want the price to go is below to 39.50. If the or 55, I believe I sold the 55. Yeah, I sold the 55. So if the price action goes below that, then I would need to do something about it. And there can be another lesson that I can discuss about that, which means I can place another repair trade on, in which I would simply, just to entertain this, here before I close with you, on a SPY, on a S&P, I should say, what I can do, I can then flip this. Let me make sure that I have a SPX here. Okay, I can flip this 39.50. Okay, so let's now imagine the price is dropping from 39.78 and it's really threatening my 39.55. The question becomes, are we going to continue lower or are we going to bounce? If we are about to continue lower, what I can do in that case, I can buy back this 38.50. So if I buy back this 38.50 and replace it with 39.60, then I have turned my bull put spread into a what? Into a bear call spread. That's the possibility. So let me now just prepare that over here on the platform right here. So as you can see over here, I have that short iron condor. If I pull up the risk graph is going to show you that the most that I can get, it's what? A $1. But if I want to edit that spread and add another trade on, that particular trade would then involve, and I'm going to just do it over here. So you would actually, I'm not going to execute it here like a few minutes before the session ends, but I would explain it to you. I would be then buying the 50 and leaving alone my 55. Because what that would do, it would completely flip my trade from being bearish, from being bullish into bearish. So let me now recap right here. Preparing the bull put. So on this side, if I have a bull put that involves the strike prices that I said, so we sold to open 39.55 put, and we bought to open protection of the 39.50 put. Now this is my repair strategy, and my repair strategy here involves leaving alone this one, 39.55. But I want to have an outcome done in such a way that I would have my outcome should be that I have this trade open at the 39.60 as a put. And keeping my 39.55 put open. So in that case, my outcome is a pair put, but I did it by simply placing buying to open 39.60 put. And then this one that we originally did, and I'm going to change the color into red. I'm going to change the color into red because I'm going to be then selling to close. So if I now sell to close that 39.50 at whatever the premium is, be aware that this repair would need at least 1K of the capital to do it. And what the outcome would be that I have completely reversed this. So if the price action then closes, so let's say SPX then closes anywhere below, let's assume 39.40. Today expiration comes to 39.40. What do I have here? I have here in the money bear put spread. And of course, this is also in the money, but I don't mind this being in the money because this one has a $5 of it, and that $5 most likely has repaired this other part of it. So we're now almost at the top of the hour. I want to thank you, Mark, and Jose, and can't see this other name, for attending this session. Thank you once again for attending the session here at the Active Option Trade. We have open trade on SPX that is expiring in 1 day, and we also have a trade on NVIDIA that I can follow up with you the next time. So thank you once again, and I will see you then next time. Bye.